FTX took a hot steaming turd on the crypto industry these past couple of weeks, and guess what? They reached out to Binance for a bailout. Now Binance did consider bailing out FTX until they went over their records, saw the different investigations that were looming, and they backpedaled and said, you know what? Nah, we're good. We're not touching that. Nah, with another man's you know what. So, with that being said, Binance said, you know what? We're going to bail out someone else. Guess who Binance is going to bail out now? Stay tuned. Now, following the fallout from its peers, FTX's bankruptcy earlier this month, Binance has established a fund to rebuild the cryptocurrency sector involving a $1 billion with a B dollar pledge from the industry titan. Now, the Industry Recovery Initiative, or IRI, fund would be open and accessible on a public address and last roughly 6 months, according to a blog post published by Binance late on Thursday. As a major player in the cryptocurrency market, Binance stated that it is its duty to take the initiative in defending customers and reviving the crypto sector. Now, this occurs after Changpeng Zhao, the founder of Binance, admitted to Bloomberg on Thursday that he had delayed posting about FTX. In order to ensure transparency, the business emphasized that the IRI is not an investment fund. It is not an investment fund. And that anyone wishing to make an investment through the IRI application procedure must set aside pledged funds in public addresses. The fund has a flexible organizational structure since it anticipates that unique situations will require tailored solutions. It can be financed through tokens, fiat currency, stock, convertible instruments, loans, credit lines, etc. Now, in response to conventional financial institutions that would not be able to transmit money to a public address, Binance stated that it is open to exploring other deal formats. Now, companies seeking assistance have already submitted over 150 applications. Applications will be open for evaluation by each co-investor in the fund on a deal-by-deal basis. Now, in the beginning, Binance will devote $1 billion, again, $1 billion with a B, to IRI-themed investment possibilities, with a potential rise to $2 billion if necessary. Zhao clarified in a tweet that the $1 billion investment is roughly split across 3 tokens: Binance Coin, Bitcoin Binance USD, and Binance USD. What a way to hold that market hostage. You want to use this IRI themed investment opportunity, you have to do it through either Binance Coin, Bitcoin Binance, and Binance USD. That is how we're going to prop up the crypto market, through Binance tokens. Now, so far, a number of businesses have contributed to the fund, totaling $50 million. Jump Crypto, Polygon Ventures, Aptos Labs, Animoca Brands, GSR, Kronos, and Brooker Group are a few of the people or industries, businesses that have contributed to the fund. Binance continued, we anticipate more participants to sign up soon, and trust me, they will, as Binance becomes the end-all, be-all crypto firm handling cryptocurrency transactions in this sector. Now, industry peers have reacted for the most part very favorably to it. If you want to get bailed out, you're going to be bailed out using Binance tokens. Now, the goal of this new initiative, according to the organization, is to help the most innovative, high-caliber businesses and initiatives created by the brightest entrepreneurs and technologists, but who, through no fault of their own, are currently experiencing serious immediate financial challenges. That being FTX crashing the crypto market and leaving many of these businesses, many of these startups, many of these entrepreneurs insolvent and unable to keep up with the bloodletting that has occurred with people withdrawing their funds. So, Binance is looking to help you out. So we're going to help you out. Here's the coins. Here's the money. People want to withdraw. There you go. It's going to keep you afloat. That is what Binance is doing. Binance is bailing out the crypto industry. Same way the Federal Reserve bailed out the banking industry back in 2008. Interesting. I'm eager to see how this plays out. I do know that, as we have seen, if we have been paying attention to the crypto charts, we've seen some coins, some tokens have gone back up a little bit, but we're still in a bear market. We're still dealing with a crypto winter. I do not foresee any bull run as far as in crypto for the rest of this year. I was actually talking with the other half of the investment bros, my brother, yesterday in regards to this. And we were saying, well, I told him, because he asked me, when do I foresee, crypto making another run? And I said, honestly, I don't see it till maybe the end of next year, the beginning of 2024. That's when I kind of see the next bull run. But there are signs. There are signs right now that show that it could be even sooner than that, possibly. Because as of right now, there is a story about a Bitcoin rally. Because as the weekly chart exhibits a distinct indicator of strength, Bitcoin may follow stocks on a huge bull run. It's time, so they say, to abandon the bear market narrative and adopt and embrace the fact that we are on the verge of another bull run. Now, despite the fact that everyone is predicting a new macro Bitcoin price low, possibly near the $12,000 mark, fresh viewpoints necessitate a change of heart. Now, there are 3 new reasons to switch to a positive position on Bitcoin at its present price of close to 2-year lows, whether it be because of macro or simply plain old Bitcoin price cycles. Now, the first theory comes from macro analyst Henrik Zeberg and involves a macro market catalyst. In a tweet from November 24th, Zeberg argued that Bitcoin was still behaving similarly to other risky investments, but not like gold. There's still no reason to give up on the notion that it will return, even though the FTX controversy has lessened the link between Bitcoin and stocks. So remember that coupling that was there between Bitcoin and the stock market. FTX has kind of did a decoupling of that link. Now, a last rise throughout the risk asset market might push Bitcoin over 100,000, according to Zeberg, who believes that rising tides raises all boats. Unlike gold, Bitcoin moves as a risk asset. Final rally before deflationary bust. When SPX bursts higher and blow off top into 57 to 6,000 target region, Bitcoin should hit 90 to 110K. A related chart suggested that the rally will commence at the beginning of 2023. Now remember, I said it wouldn't be till the end of 2023, so they're getting a jump start. Returning to triggers specific to cryptocurrencies, unbalanced volume is one of the signs indicating potential future bullish periods. Now, popular trader Alan Tardigrade claims that given the Bitcoin weekly chart's 20 weeks of bullish divergence, it is now important to pay attention. A portion of the related Twitter comment stated this implies the slowing of decline momentum. Bitcoin may have a significant surge. Same thing I was saying about this negative growth of the American GDP. We're talking about, we had 2 consecutive quarters of negative growth. Yes, we had 2 consecutive quarters of negative growth, but as you can see, you compare the 2 quarters, it was declining. And what happened in that 3rd quarter, we were in the positive, just like I said in the previous video. But anyway, we'll keep on going. Now, a portion of the related Twitter comments did say, of course, it implies a slowing of decline momentum. Bitcoin may have a significant surge. Now, a surge upward would be consistent with how Bitcoin behaved following the COVID-19 cross-market meltdown in March of 2020. OBV maintains a running total of volume over a specific time period and serves as a cumulative indicator of buy and sell pressure. In contrast to cumulative volume delta, it includes transactions other than just ask and bid trades. Now, in the world of Bitcoin analytics, bullish divergences are not just being made by OBV. For trader and technical analyst mags, The event to watch moving forward is a phenomenon that is manifesting for the first time in Bitcoin's history. Mags looked at the weekly chart once more and saw that Bitcoin's Relative Strength Index, or RSI, is currently displaying a bullish divergence on weekly timeframes. This bullish divergence on weekly timeframes is something that has never happened previously, not even at past bear market lows, according to Mags. So, if I say towards the end of 2023, beginning of 2024, and they are predicting at the beginning of 2023, we can come to a compromise and say maybe second quarter, end of second quarter, maybe third quarter, we would really start to see that bull run in Bitcoin. So should we wait till then? Heck no. It's at the bottom. It's maybe bottom out a little bit more. Let's go ahead and jump on in. Maybe a little further on down the line. We'll go ahead and jump in a little further on down the line. Probably wait till next month. Maybe January, February. See how it goes. Test the waters. Pay attention. Set your alerts. Let's see what Bitcoin is doing. But at the end of the day, Binance is bailing out the crypto industry. Bitcoin is looking to be supposedly on a bull run. We have to wait and see what happens. This is your boy Stevie B, Money Talk Sundays. Hit that like, share, subscribe button. Do what you do best. Happy Thanksgiving. Peace.